right, good afternoon, everybody, and welcome. My name is Maureen Conway. I'm Vice President at the Aspen Institute and Executive Director of the Economic Opportunities Program, and I am so delighted to welcome you to today's conversation in our Working in America series. At the Economic Opportunities Program, we do a variety of work to advance ideas that will help low and moderate income Americans connect to economic opportunity and thrive in a changing economy. And in the Working in America series, in particular, we look at a variety of issues that affect the shape of opportunity that working Americans face and consider ideas that could make things better for working people. We're extremely grateful to the Ford Foundation, to the Prudential Foundation, the Cerdna Foundation, and the Walmart Foundation for their support of the Working in America series. And in today's conversation, as you've seen, we're going to talk taxes and what tax reform could mean for low and moderate income workers in the United States. Now, if you think about taxes, you probably try not to, but if you think about taxes, one of the things you think about is the complexity of the American tax system. And this is not surprising because we've come to rely on the tax code to do a lot of policy making and to incentivize a variety of economic behavior. So when we think about low-income workers in particular, probably one of the first things we think of is the Earned Income Tax Credit. In 2015, roughly 27 million workers earned the Earned Income Tax Credit. So that came to nearly 1 in 5 working people, right? So the tax system is a big deal for working people. But the tax code offers a variety of other incentives. We offered tax-preferred saving vehicles for college, for retirement. We offer home mortgage deduction to encourage home ownership. There are incentives to businesses and investors to encourage job creation. There's preferential treatment for capital gains. There's targeted tax credits, so you have like the work opportunity tax credit to encourage employers to hire veterans or other groups that are seen as facing barriers to employment. So in short, we do quite a lot of economic policy making through the tax code. So as the talk of tax reform comes along, it's important to think about the tax system, not just sort of for the economy broadly, but in particular, how it affects working people in the United States. So today we go super wonk and talk taxes. So I just have a couple of things to say before we get started. First of all, please do silence your phones. We're very thrilled to be live streaming as well as recording. We're very glad to have C-SPAN here today. So please do silence your phone, but please do tweet. Our hashtag is TalkGoodJobs. I also let's see if I need to know. I don't need to do any of those things. I just want to now introduce our panelists. So I am thrilled to introduce the panelists, and I will start from my far left and work this way for your far right. We have Frank Clementi, Executive Director of Americans for Tax Fairness. Next to Frank, we have Maria Avey, Sarasota Area President at United Way Suncoast, Florida. Next to Maria, we have Alex Brill, Research Fellow at the American Enterprise Institute. And I am delighted to have right next to me, Jean Sahadi, Senior Writer for CNNMoney.com, who is going to be our moderator for today's conversation. So Jean, thank you so much, and I turn it over to you.
Thank you so much for having me. Just a little bit of table setting on tax reform for low and middle income workers. Right now, what we're hearing from politicians is a lot about business tax reform. You have a lot of support among Republicans. You have a lot of support even among business-friendly Democrats who really think that the business side of the tax code needs a lot of reform more urgently even than the individual side. There also is a sense, in fact, to me, as I cover this, it sounds more like lip service to how will this affect the middle class, how will it affect financially strapped workers. It's going to be very hard for them to just do business tax reform without addressing the larger population. So I'm glad to be doing this panel because I think we're going to be talking about issues that should be discussed in the context of overhauling the code that is not currently being discussed. It seems to me that there are 4 ways that tax reform can affect low and middle income workers, positively or negatively. You could talk about giving them new or expanded tax breaks that already exist, but the underside to that is if other changes that are proposed undercut the value of those new or expanded breaks, that may or may not change their tax liability at all. Another way is through economic growth. Republicans are making the case that if you lower business tax rates and you reduce their tax lower their business tax rates and then lower their breaks, that will encourage investment. Investment will create jobs. Jobs will also, more jobs and higher wages. So hopefully that would work. If it doesn't work, we've just blown through the deficit. A third way is to, and Frank, you'll speak to this point, I think, is there's a lot of people think, well, you should raise the rates on high-income individuals, make the tax code less beneficial to them, and raise more revenue to support programs that help low and middle-income families. There's sort of an underside to all of those arguments. Right now, we have a pretty progressive federal income tax code. 40% of filers end up owing nothing in federal income taxes. So it's unclear if some of the proposed changes would even help them at all because their tax bill is zero to begin with. And as I said, if economic growth doesn't work out, all we've done is reduce the amount of revenue we have available to us. So I'm going to turn it over to these guys who bring excellent perspectives, all of them very different perspectives, to lay out what they think is working today about the tax code for low and middle income workers and what's not, and then we'll go from there. And then afterwards, we'll toss to you guys for your questions. So Alex, go ahead. What's working today and what's not for low and middle income workers?
Thank you. Thanks for having me here today. One of the things that I note when I think about the federal income tax with respect to low and moderate income workers is the disparity to which the tax code affects different people within that population differently. That's always true across the income spectrum, but it's particularly true among low and middle income families and households. For example, as was mentioned, the earned income tax rate, one of the largest welfare programs, I think the largest welfare program at the federal level, is a very effective program, helps raise people out of poverty, encourages work and labor market participation, but not everyone who is lower middle income is eligible for that program. There's both people who are eligible and not getting the benefit. There's some amount of improper payments in that program, but it's also just a function of family size and family composition. And so for within the structure, there are a lot of people who are ineligible for that program. So the amount of taxes that are paid, either when you say taxes, meaning federal income taxes or all federal taxes, which include payroll and federal excise taxes, varies widely. And so that inconsistency creates complexity, creates uncertainty for taxpayers. A taxpayer may have one tax liability one year and a very different tax liability another year, which makes it difficult to plan, difficult to prepare for their taxes. And all of those things are inefficiencies, in my view, in the system. When we think about what we could do to the tax code, and when we talk about tax reform in Washington, that discussion is about federal income tax, both federal individual income tax and federal corporate income tax. We're not having a conversation, we could, but just the reality is we're not having a conversation in Washington about changes to the payroll tax system. Someone could introduce that topic, and we're not having a conversation about changes to federal excise taxes. And of course, Washington's not having a conversation about how the states should change their tax systems. So for the individual low and moderate income household, they're facing all sorts of taxes, but the tax reform debate is primarily related to income tax. And I'll just say two specific things about how I think about how those two taxes affect workers. With respect to the individual income tax, I think about tax policy in two ways. One is the average and the other is the marginal. And so on average, what are people paying? What is their tax liability? And for people who are low and moderate income, on average, their federal income tax liability, not their total tax liability, their federal income tax liability is negative. Policymakers could pursue strategies to make it more negative, but it is negative already. We are using that tax system to redistribute income to low and moderate income households, generally speaking, not necessarily every household. The other way I think about taxes is on the margin, individual taxes on the margin. What happens when they earn one more dollar? And here we see, again, wide disparity across among individuals who are low and moderate income. On average, we see taxpayers facing marginal rate of 20% on the federal level and higher when we start to bring in the effects of other programs. And that can create, in some cases, disincentives for labor market participation or for additional hours of work. The other way I think about the tax code with respect to these individuals is the effect of taxes, of indirect taxes, taxes that they don't pay that might affect their well-being or their livelihood. And here there's an emerging economic literature on the corporate income tax that finds that corporate taxes that are paid have an adverse impact on the wages that workers earn. And one of the reasons I think that policymakers are so motivated to pursue business tax reform, corporate tax reform, is out of an understanding that those taxes will affect the wages of workers across the income spectrum.
Okay. I did mean to mention the other way that low and middle income workers could be helped by tax reform is simplification. And I think Maria will spec that out for you. It's sort of stunning, some of the things you told me before this meeting. So.
Sure. Ways that United Way Suncoast that we're helping families is with the free tax preparation, VITA. We believe that the VITA program really provides families the mechanisms to, because the tax code is so complicated that families sometimes struggle, that they don't understand their tax returns. The volunteers are trained individuals that have to go through an IRS certification to be able to help the families with their tax returns. And a lot of times folks will say, well, is it just that they're not paying a fee to have their tax returns prepared? And, at our United Way, we filled out around 19,000 returns for families that brought $25 million back in tax credit for our families. If the tax preparers charge, let's say $200 for those individuals to have their tax returns prepared, that we saved the families of the 19,000 returns around $3.8 million. And we have to think about that, because one of the reasons that VITA is so important is that we're not only helping the individuals who are filling out a tax return, we're also helping them understand their tax return. We're talking to them about how to build assets, how to save, what should you do with your tax return? Because if you think about it, families in Florida, 44% of the families that live in Florida just make enough for the basic expenses for childcare, rent. And just having $400 in their savings account could help that one individual make it to work because maybe their car breaks down. So we have to think it's beyond saving them on the $400 filing fee that they may be charged, but we're providing assistance and advice on how to spend the refund that you're receiving, but we also show them, teach them, this is what your tax return, this is what you're paying for, a better understanding, because I think the confusion and why we want tax reform to be simplified is so it's easier for families to understand. And we're asked a lot of times, well, if it's simplified, do we still need VITA? Yes, we still need VITA, because many families need to have a place to go to understand what their taxes are going to be. We have many families that their average wage the families that come to a VITA site make $22,000 a year. And a lot of the families, they may not have a computer at home, and we currently have myfreetax.com through the IRS that they can prepare their tax return, but families like to come and talk to a tax preparer, just like all of us have the opportunity to go to our tax accountant and get advice and get financial advice. Our low-wage workers, they want to have those same opportunities. So we believe that the VITA program is a very important program that we currently have and we provide to low-income workers.
Thank you. Frank.
Hi, I'm happy to be here. I'm going to take probably a little bit more of a macro approach to the issue, because we're actually in that kind of an environment where we're discussing what's tax reform going to look like in Congress. President Trump has a proposal. The House Republicans have had a proposal. And the way we look at it, Americans for Tax Fairness, which is an organization of about 400 national and state organizations, we're working for what we call a fair tax system. We believe that the wealthy and big wealthy corporations ought to be paying quite a bit more in taxes than they're paying now. We're not asking the middle class to pay anymore. What we want to do is basically raise a lot more revenue so that we can make the kinds of investments that we think are critical for an economy, to create an economy that's going to work for all Americans. Right now, we think the economy is not working for everybody. There's a great deal of inequality in our country. The vast majority of the wealth of the country is controlled owned by the top 1%. Very little is owned by folks at the bottom. And we need to change that dynamic. And part of it is to grow the economy and to grow the pie. We think the best way to grow the economy and grow the pie is to make investments. We actually think that we have what we call a revenue gap in this country. I'll use a little bit of math. It's not the easiest thing to understand, but revenue is about 18% of federal revenue is about 18% of our economy right now. But our spending is at 21.5%. So that difference between 21.5% and 18%, that's the deficit, and that's what I call the revenue gap. That revenue gap is going to go up to 23.5% versus 18%. Revenue is going to stay flat, but the gap's going to go. The spending is going to go up to 23.5%. Why is it going up there? It's going up there because folks are retiring. We have a big baby boom generation that's going, and we have a choice. We could cut things, cut retirement security, cut Medicare, cut Social Security in order to close that revenue gap, or we can raise more revenue. And I believe that you asked that question in public, do they want to make more revenue to ensure security, to ensure retirement security, to ensure that we can afford to put our kids in college, to rebuild our roads and bridges. We all recognize what a critical need there is to rebuild our infrastructure, to do new medical research. All of these things cannot happen now unless we raise significantly more revenue. And the only place to get that revenue is from those who are benefiting from the economy currently. If I could just give one very concrete example, the Affordable Care Act is an example of what I'm talking about. That's the legislation that President Obama got passed that provided health insurance to 20 million people. That was paid for by taxing the richest 2% of Americans, putting an investment tax on them, a modest investment tax, and by adding a 0.9% to their Medicare tax. Now, we're talking folks who make $250,000 and above, the top 2%. Also, insurance companies and drug companies were asked to pay a little bit more because they were going to get a lot more business. Those taxes is what enabled us to provide health care coverage to 20 million Americans. And the problem right now is under the Trump care legislation, they want to wipe out those taxes, which is why 20 million people will lose their health insurance. So that's how we advocate using the tax system to create more opportunity for everybody.
If I can play devil's advocate to Alex and Frank, both of them seem to agree that corporate taxes have a big impact on low middle income families, but for very different reasons. Frank, you believe that higher taxes for corporations provides more money the federal government can spend on low and middle income workers. Alex, you believe if you lower corporate rates, corporations will create more jobs, more investment, pay higher wages. Both of those things sound completely reasonable, except as a cynic now, because I've covered this for so long, I firmly don't think my company is going to give me higher wages if their tax rates are cut. I'm dubious. I also don't think if you raise corporate taxes that companies will stay in the country, right? That's the whole point of corporate taxes. So you two can just go right at it. You can tell us how you can come together on this point and make my life a little bit easier, because I do not understand how the two of you will come together on this.
Well, let's start with what are corporations paying now? There's the top line rate, which is 35%. That's called the top tax rate on corporations. Then there's lots of studies that have said that tax rate is substantially less than that.
Sure.
And now we're talking federal taxes. We're not talking the entire state and local and all that. We're just talking federal taxes. The Government Accountability Office, which is a nonpartisan entity, they looked at for 5 years, 2008 to 2012, they looked at profitable U.S. corporations. You don't want to look at unprofitable because they don't pay any taxes, but the profitable corporations, they said they're paying a 14% tax rate, so that's more than half under what the effective tax rate is. There's lots of studies that have shown that essentially what, Alex, you're talking really about trickle down, that if you give more profits to corporations, they will then spend the money to invest, and that will create more jobs and grow the economy. First of all, most academics don't believe, the studies don't show that trickle down actually works. We've gone through that before. Bang for the buck, you get a lot more jobs created if you invest in infrastructure, 3 times as much jobs in infrastructure as you do with corporate tax breaks. That's a CBO study, and it's a Mark Zandi study. Corporations are very flush with profits right now. Their profits are higher than they've ever been. And yet we don't see this massive amount of investment going on. Why? Because frankly, the demand's not there. What drives investment is much less about tax cuts. It's much more about consumer demand and whether people have the money in their pockets to drive things. Remember that 70% of our spending in the country is consumers buying things. And so if wages are depressed, if too many people don't have work, that's not going to drive the economy, so businesses aren't going to invest in that case. So we have very high profits for corporations right now. Their taxes are at the lowest that they've been for decades as a share of the economy. So the companies are not overtaxed. I maintain they're undertaxed.
After you.
Sure.
Right?
So
Yeah.
I agree that the amount of taxes paid is certainly, for U.S. corporations, is certainly less than the tax rate, the 35% rate. That's definitely the case. And that's also the case, not even, as Frank noted, not just because of firms that are in loss positions. That has to do with the base of the tax system, not as much as anything. Large share of the federal tax that are paid by U.S. multinationals, and a lot of their earnings accrue abroad. And so the way our tax system works is that the taxes are due when that income is either earned in the United States or returned to the United States. And firms are investing in lots of what they might call tax strategies or tax planning strategies to minimize or avoid the federal tax liability. And for those reasons, their actual tax liabilities are certainly far lower, just as Frank described. GAO and others numerous other people have made that point. The question is not one that I would characterize as trickle down. The question in my mind is, what's the incidence of the tax? And so we know in public finance that you can ask the question, who writes the check, who sends the money to the IRS, and then you can also ask the question, who bears the burden? And so if you take a tax that we know well, one that's easy to relate to, let's say the cigarette tax, smokers don't write a check to the IRS when they buy a pack of cigarettes, right? It's the tobacco manufacturers that pay that tax. But we know that the consequence of the cigarette tax is that cigarettes prices are higher, and that's by design and for good reason. When we think about things like income taxes, it's more difficult to try to trace through. We know who writes the check, the corporations write the check, but it's more difficult to trace through to find out who bears the burden. And for a long time, the assumption in the public finance literature was that the burden was borne by the owners of the corporations, that the tax fell on capital. In theory, it could fall in any one of a number of places or in combination. So it could fall on workers in terms of lower wages. It could fall on the owners of the firms in terms of lower stock prices, or it could be passed through into higher prices for consumers. And for a long time, the assumption by organizations like the Congressional Budget Office and others was that a large share of that, not entirely, but a large share of that was borne by the owners of capital, by the shareholders of those firms. The simple fact is that we've got new evidence over the last few years, a half dozen or so empirical research articles that have started to question that finding. And it's not a theoretical argument, it's really an empirical question. Theoretically, it could fall anywhere. Empirically, what we have been learning in the last few years is that a large share of that burden is actually being borne by wages. And the types of studies that are being conducted are the following. We look at countries around the world over many decades, and we look at how tax policy changes in those countries and how wages change in those countries. And what we find is these relationships between corporate tax payments and wages. Some of these studies find really huge effects that almost seem unbelievable, like $1 change in a corporate tax is more than $1 change in wages. Some of the results are less than that, that $1 increase in corporate taxes might be 50 cents or 75 cents in wages.
Those stats, though, do those measure wages overall, Or do they measure, in other words, are they paying the CEO more, so that's where the dollar for dollar comes in? Is that where that's coming in?
It's not being picked up by the 20 people at the top.
Okay.
Those people are earning an enormous amount of money, but they're not earning enough money to be capturing all that benefit themselves.
Okay.
Could I just clarify, at this point in time, Alex, the Congressional Budget Office attributes 80% of the corporate tax to be borne by the owners of the corporations and only 20% by the workers. I just want to clarify that. So the vast majority of the taxes that are paid by corporations are being attributed to the owners of those corporations, and the owners of corporations are overwhelmingly well-to-do folks. So
the shareholders and
That's right.
Yeah.
And if that's true, if that's true, if what CBO is saying is true, then we should think about, corporate tax in one way, right? That's a tax borne by rich people, by the rich people who own the corporations. Right. And then we can make decisions about how we want to tax them. If it's the case that that's not true, that the newer evidence is actually right, and that a lot of the burden of this tax falls on workers, then we might think about tax policy differently, right? And you might not agree with that literature. It's not uniformly agreed to. I'm not suggesting that there's unanimity in the profession, but that's what the latest evidence is suggesting.
Maria, I just want to know, the people who come to United
I'm
Way
in the
Suncoast.
middle of this.
That's right. That's what I want to ask you. I wonder if any of your clients would understand, or care. I mean, I think it's very important what we're talking about, but would they give a hoot? Do they think of their way? If I said to them, "Hey, we're going to cut corporate taxes, and that's going to be great for you, Mr. and Mrs. Smith, because eventually on aggregate wages are going to go up," is that going to help them pay for dinner, pay for their kids' childcare? I mean, is it going to translate to them?
It will translate to them if they get a wage increase, but the reality is that if they don't have the certifications and the trainings needed that warrant that wage increase just because a corporation gets tax breaks, and the entry-level workers and mid-level workers, if they don't have the skills to be able to earn that higher wage, it's not going to translate to them. Because a lot of times what we see out there with a lot of our employers, we're investing in a lot of dollars into job training and certifications because we are trying to rise in career pathway the workers at the companies to move up. Now, will companies spend more money on job training to be able to certify employees, because a lot of the entry-level workers, they go to work, maybe they only have a high school diploma. They need a degree, they need a certification. A lot of times it's just a skill set needed for a company to expand. But a lot of times job creation is based on, do we have the skilled workers working to be able to expand our business and grow our markets, to be able to grow the corporation. So a lot of it end up being part of the workers are the ones that are going to dictate if that company is going to be able to expand. But we see more and more employers that the wage increases, they're not giving them just because, okay, we're going to raise everybody's salaries. But this is, talking from being boots on the ground and working with employers in our area.
Boots on the ground matters more
It's
than
on the
everything.
ground, yeah.
I just wanted to pick up on that point. I'm a tax guy, and I think that tax policy matters. It affects the decisions that people make. But it would be completely wrong to think that only tax policy matters, and so many other things matter. And skills is one of those huge things. And so you could have the best tax code in the world, whatever that would look like. And if people don't have the training they don't need, if they don't have the work ethic, if they don't know, basic soft skills and hard skills about how to get to work on time and how to be responsible, it's not going to make a difference. There's so many other factors that are also important.
Well, just related to the corporate tax issue and taxes on wealthy folks, the analyses that have been done of the Trump tax plan and the House Republican tax plan.
But can we just say the Trump tax plan is still a question mark?
Right. Yeah, I'm sorry.
Still a question mark. Less detail than we had during the campaign. Now even less, because now we really don't know what
it's the Trump tax plan that he put out during the campaign in last September. The analysis of that plan is that 50% of the tax breaks in that plan go to the top 1%. after 10 years. So the vast majority goes to the top 1%. And that's because the corporate tax rate is cut so deeply. Corporate and business tax rates are cut so deeply. So the largest benefit, the huge benefit, is going to go to the top 1%. The Republican tax plan that was put out by Paul Ryan last year, it's hard to believe, but 99.5% of the tax breaks are attributed to the top 1% after 10 years. 75% in the first year, but then it rises to over 99%. The reason it is because it's not that the top tax rates on individuals are cut so much, it's because of the corporate tax rates cuts and the business tax rates cuts that are in these two plans.
In other words, it goes to this assumption about who bears the burden.
Yes, exactly.
So that suggests that that it really is a tax borne by rich people, the corporate rate, and if you cut it, it's all right. This is why my job is so hard, because they both make excellent points. You want to say something else? I'm sorry. No. Help me out. Do you think, when I was talking about doing this panel, I was having discussions with folks at the Aspen Institute, and I said, is the supposition of this panel that the tax code is really the best way to help low and middle income people? And one of the answers I got was, good God, no. But it's the only thing people are willing to talk about. So when you're talking about job skills training and funding that, I mean, it just seems to me that the support for low and middle income families is such a multivariate problem. But maybe it starts with the amount of revenue we bring in. Excuse me. So much of the programs that support those families under government spending it's discretionary. It's what lawmakers want to do in any given year. So it fluctuates. And I think Maria can speak to that issue. I know you're talking about VITA, but do you have that experience in other areas where you're helping your clients?
Yeah, absolutely. And I believe that the tax reform gives us the opportunity to really look at ways to help the low-wage workers when we talk about whether it's the VITA program or we look at job training, and EIC. EIC is a very important component for the working families because it's one program that really has encouraged working, and families can work towards the job skills and growing, and it's one of the programs that's a curve. As they make more than the tax credit that they get will start going down, but they see the advantage because they're making a higher wage. So it's very important, and we've in Florida had an appropriation for VITA that was $500,000 that we received last year, and Florida was the only state this year that the VITA returns were up 9%. Because we were able to really focus and put a lot of VITA sites and really reach out to the working families. But we partnered with employers in bringing the VITA tax returns to the employers where the workers are working. Because a lot of times it's a lot of the barriers that when you think of a low-wage worker or moderate, they have a lot of barriers. Some of them have 2 jobs, they have families, and bringing the VITA returns and our preparers to the place of employment eliminates one thing that they don't have to, plus we open sites on Saturdays. But having appropriations, and we talk about wanting to be able for VITA to be something permanent that we see in the tax code, because it's so important and so useful for families, as well as job training. And one of the things, EIC is another thing that we want to preserve. We want to keep the EIC. If you think about it, in the 90s, when EIC was expanded, we had more single moms going back to work because it encourages work over welfare reform. So these programs are very important, and looking at what we put, I really believe that the reform is an opportunity for us to look at how do we help our low-wage workers. We're talking about families with children. They're working hard. They're not there because they want a handout. They want the easy way out. Believe me, I believe that some of these folks work harder than we do because they're trying to support their families, and the tax code sometimes does not help them because, yes, they may pay a lower tax rate, but they're paying sales tax. They're taxed in other ways that it affects their daily of being able to support their families.
Right.
Well, just to give you a concrete example, I was racking my brain, how much does the federal government spend on job training? And I don't know that, but let me give you a different comparison. We call it a tax trade-off. So the government spends on the earned income tax credit about $63 billion a year. This is the income support that Maria was just talking about. It helps low-wage workers. It gives them the incentive to work, and they get about $3,000 in their pocket through this program. 27 million people get it every year. That's probably about half of who's eligible for it. There's a huge number that aren't even making it available to themselves. So
And why is that? Just remind us why they're not taking advantage of it, because they don't understand it?
Is
that why?
They don't know,
Okay.
they don't know about it,
Okay.
and they don't understand it.
Okay.
Yeah. So one company, Apple, we all know Apple, probably half the people in this room have Apple phones. They have $235 billion in profits that are offshore that are untaxed. Alex was talking about that. Now they're taxed, and Apple, they're taxed offshore. They're paying a 6% tax rate on the profits that are offshore. How do we know that? Because Apple has told the Securities and Exchange Commission, they're supposed to report this to the SEC, that if they were to bring the money back, they would owe a 29% tax on that money. And our rate's 35%, 35 minus 6% that they're paying offshore is 29%. So that 29% is $75 billion. So that one company owes us $75 billion in taxes. That's more than what is being spent on the EITC. That's the kind of comparisons that we need to think about, and I would say we need to change in order to afford the kinds of investments that are going to make a difference in the lives of working people.
So then let me ask you on the corporate tax front, what should the top corporate tax rate be, and do you want the worldwide? So right now we have a worldwide system, which means that wherever you earn your dollars, the United States government is going to tax you on them if you're a business. The question is when you bring it back, that's when they tax you. Most countries have a territorial system, which is businesses only pay taxes on the profits where the profits are earned. And there's a proposal with Republicans to change the United States to a territorial system. So do you want worldwide or territorial, and what's your top rate? And the same question to you, and you if you want to weigh in.
So our organization is in favor, we actually haven't taken a position on, we want to, by and large, the system we've got now, we want to end the loophole, what's called deferral, that lets companies avoid taxes on those offshore profits. We think that just like we pay our taxes every single year, the corporations ought to pay their taxes every single year. They shouldn't be allowed to defer taxes until they, quote unquote, bring the money back. And let's be clear, most of the money that they have offshore is not really offshore.
Right.
It's booked offshore in their subsidiaries. Most of it's invested back here in treasury bonds and other corporate bonds. They just can't bring it back to the parent company and use it. We haven't actually, as a coalition, we've not taken a position on what we think the top tax rate is, because we want to see what it all ends up being, right?
You want to preserve the worldwide system.
Yes,
no more deferral.
by and large, our problem with going to a territorial tax system, right now, we're losing about $100 billion every single year by corporations that are shifting their profits offshore through patents, intellectual property. It's mostly high-tech companies and drug companies and some finance companies. They are able, because of the loopholes we have, they're able to shift their profits offshore and avoid paying these taxes on. These are profits that are earned here in America, but they're just making it look like they're earned in their subsidiaries offshore. So we want to close that loophole. What the rate is in the end, for us, is determined by how much money do we need to raise in order to have the kind of economy that is going to be able to make the investments that we need. It's going to be able to take care of seniors in retirement, et cetera. And so that number is a little hazy, right?
Right.
Because it depends a lot on what individuals are going to pay.
But also it's going to depend on all the gaming that companies will do to not pay it, if you raise the rate or keep it high or
whether
whatever.
we can get rid of those loopholes. That's
So
right.
what's your favorite top rate? And I assume you want to go to territorial.
Yeah, so
And
my
why?
view, perhaps not surprisingly, is a little different than Frank's. I think that a lot of the income that's earned in the current system by corporations is ungettable by the IRS under the structure that we have. And so we can sort of observe the income that's being earned, and we can do that through SEC filings and others. But actually being able to capture that money, I think, would prove very difficult. And the reason is because we live in a very competitive environment. 50 years ago, when the United States economy was more closed and we were less engaged in trade and financial markets were less sophisticated, it was easier to capture this money. But through the strategy that Frank's describing, firms are locating their intellectual property offshore, and they're engaging in these strategies that I mentioned earlier. And they will continue to do that. They will continue to optimize their tax system. And we can think of that as unfair and unjust and unright, but we also need to think about having a tax system that's operational. And so the incentives for firms to engage in these practices, and I'm not saying that they don't, I'm agreeing with Frank that they do engage in these practices, is large when the difference between our tax system and the tax system of our trading partners is large. And so we have a top tax rate of around 35% in the United States, of 35% plus state and local tax.
Just by law, but they pay less than that once they take all their tax breaks.
But on the margin, when they're earning an additional dollar, they generally would pay that amount of tax if that dollar was subject to tax. Mm-hmm. If they engage in the same activity in France or Germany or Italy or Spain or Portugal or Ireland for sure, or the UK for sure, or Canada or Mexico, or anywhere else, they would pay far less. And so again, we can say, well, that's not fair or right, but it is operational for them. And so then the question is
because their obligation is to their shareholders, not to their country.
That's right. I mean, they're compliant with the law, and those are their obligations. Mm-hmm. And so they are truly earning money around the world, and paying taxes and offshore, and they are also engaging in strategies to maximize the extent to which it looks like they're earning money offshore. They're doing both. And I don't think we can capture that money. Certainly not by raising the corporate tax system. The question is there another way that's less distortionary, that wouldn't encourage them to play these games, where we could collect an appropriate amount of money? Some people have suggested that might actually, that there'd be less gamemanship if the rate was lower, if it was more competitive. If we had a rate like other countries' rates in the 20s instead of in the 30s, then companies would pay tax where they truly earn it, and when they truly earned it in the United States, they would pay the tax here in the United States, and they wouldn't have those same incentives to offshore their profits. The House Republicans have put forward a rather unpopular proposal that I think is quite elegant, called our border adjustment tax, that would go at the heart of this issue and ensure that there would be that tax collection. The other thing I'll note is that when we think, just to put orders of magnitude on things, about 10% of the federal tax receipts come from the corporate tax. So where does the federal government get the money that it gets, the 18% of the revenues that it gets? Generally from individual income tax system. As you noted, a lot of low and moderate income households pay no or negative federal income tax liabilities. Most of the money that's collected today in our system to pay for the programs that we operate are from the income tax system. And so when we think about reforming the tax code, if we wanted to reform the tax code in a way to raise more money, it would seem that we would want to do that. If that was the goal, we would go where the money is, right? We would go and we would broaden the tax base and collect more money from individuals. Trying to collect more money from corporations is going to be
But also we should make the point that a lot of the, let's just call it business taxes, a lot of it is coming through the individual code now, because you have a choice when you set up a company to incorporate or become what's called a pass-through business, what a ridiculous term, but whatever. It just means that the business's profits get passed through to you, and you pay the tax on your individual tax return. Mm-hmm. So over the last 30, 40 years or whatever, a lot of business income tax has transferred to the income tax system. So
in part because of the inefficiencies of the corporate system.
Right. Okay. So Frank.
Just 2 quick points so folks understand. Most of the money that's offshore, 75% of it is owned or held by 50 corporations. 40% of it is held by 10 corporations. So there's a small number of corporations that we're talking about that have the vast amount of this profits. It starts with Apple, Microsoft, GE, and Pfizer. Apple alone has 10% of those profits offshore. So we're talking about a very small number of companies. There's a lot of companies that are paying 30%, 31, 32%. You know, those are domestic companies. So the tail wagging the dog here is these multinationals that aren't paying close to their fair share. The second closing point I'd make on this is that most of the money is not in France or Germany or Britain, countries that are true competitors of ours. Most of this offshore profits is being booked in tax havens, where there's a 0% tax rate or a 1 or 2% tax rate, and we will never compete with that. And if you create a territorial tax system, it means the tax rate that they're going to pay is where they book their profit. So it's just going to make, I say it's going to make the world a tax haven.
Okay, so we kill deferral. The minute you earn your profits, pay tax right now, to the United States government. What are you going to do if I tell you that?
Well, I'm not a corporation, so
You are a corporation. You look like a corporation. What would you do as a corporation?
He looks like a corporation.
What would you do if that would change?
So it's a function of the rate. I'm not ducking the question.
It's a 25% rate. They do what the House wants to do. We lower from 35% to 25%, but no more deferral forms.
So the House proposal is at 20%.
20.
But,
No, for corporation. Oh, right. Sorry, that was individual pastors. Right. 20%.
Yeah, 20%.
Yeah.
I don't know. I mean, at some point when the rate is low enough, the importance and value of deferral diminishes. So
Okay.
that's true. It's the same with a whole spectrum of in other provisions. So we say net interest deductibility should go away, or there should be expensing or depreciation or this credit or that credit. When the rate gets low, the distortions in the code get small. And so it's one of the reasons to have a low rate. When we have a low rate, sort of the other things matter a lot less.
They matter a lot less. Okay.
It also matters a lot less as a policy. It also matters a lot less as a budgetary issue. So whether we have deferral or not, if the rate's 15, it doesn't matter as much as when we have deferral or not, and the rate is 35.
Okay. Let's talk specific tax breaks for individuals, because I think we're not going to resolve corporate taxation as much as I was hoping to. Earned income tax credit. What do each of you think needs to be done to improve on that credit so that it has better reach, it's better targeted to the people who need it most?
I think that there's a low suboptimal take-up rate, so not everyone who's entitled to the program is taking advantage of the program. We need better publicity and awareness so that everyone who should be getting it is getting it. We also have a problem with improper payments. A lot of people who are not eligible for the program are successfully claiming benefits, and we need to figure a way to tackle that problem while making the other problem go away.
So those are the two things that lawmakers should focus on: anti-abuse and advertising.
Utilization,
To boost utilization. Maria.
So first of all, let's preserve it. Let's not lose what we have. But we also have where a worker without children, they get a smaller credit. But if someone's under 25 or over 65, they're not eligible. We see a lot of seniors that have to work. It's not that they're just working a little bit because they want a little extra money. So if they're over 65, they're not eligible to get a credit. So maybe looking at how can we expand that, because if you think about a worker that's under 25, but they may be 23 years old, and they're not getting a credit, they still could be in poverty because maybe they're only making $16,000, $17,000 a year.
And that applies to single parents under 25.
Right.
So they don't get their earned income tax credit, even though it's meant to support families.
If they're under 25 or over 65. So looking at both of those and being able to...
Expanding eligibility is the most important thing. Not increasing the value of it, not changing just expanding it so that it hits people under 25 if they're parents and people over 65 if they're low income. The EIC or EITC is one of the best mechanisms we have to encourage work. And if we think about corporations that need to have the demand, the families that are receiving the tax refunds that they're using to pay down their debt, they're using it to put a down payment down on a car.
they are using it during times that maybe they're not getting a paycheck, that they're saving the money. You know, we have to look at its economic impact. They're spending the money back in the economy that stimulates jobs and increases demand. So it's just a very powerful mechanism that we could have to encourage workers. And we want more workers, because when we talk about income tax and the way that we're raising money to be able to pay for programs or be able to pay for things, we have to have workers working. If they're not working because they cannot afford to go to work, we're not going to be able to do what both of you are talking about.
I think just building on Maria's point, I believe for individuals that they aren't eligible above $15,000 a year. They do not get any EITC support.
They don't have kids, you mean? Or is this about children?
Single,
not married, but not having
right.
to do with whether you have children.
Correct.
Single, no kids.
Single, no kids.
Single, no kids, okay.
Basically, you're saying that you might get some help up to minimum wage.
Right.
But beyond that, you're not going to get any help. Now, in a lot of cities, you can't live on minimum wage. Sorry.
Mm-hmm.
And so I think that's the most critical.
So expand the eligibility to people with no children who are single.
Yeah, right. And
So single parents under
raising-
25, single people without kids generally, and people over 65 because if they're low income.
Yes, and I would say in the grand scheme of things, if I'm rejiggering the federal budget, if there's money to, when you look at where you want to make your investments, this is an important place to make some investments. So hopefully, in the end, we got more money to invest, and this might be one of those places. Overall, in terms of for everybody.
Right. Child care costs are big in the news. We've gotten a lot of suggestions that the Trump administration is interested in helping people pay their child care costs, but how it's done really makes a difference. I think broadly, and tell me if I'm wrong about this, even though you may have the best tax break in the world, if it doesn't come to someone who has to pay their daycare costs this month, it's not going to come for 12 months or more to them. Is there a way to make that more available to them? I mean, in the same way the health credit, the subsidy that the Affordable Care Act offers, it's sort of advanced to you. Is there a way to do that with childcare?
I mean, the programs can be, the credits can be advanceable. I mean, they could be incremental and a bit.
They can be.
They can be.
Yeah.
I mean, so it could come out on a quarterly basis, a monthly basis. There's slightly higher administrative costs, I think. There's an issue about how to rectify that at the end, because you don't really know till the end of the year what your annual income is going to be. And so if you're eligible, you think you're eligible for a program for the first 6 months, and you're drawing on that benefit. If it turns out that you earn a lot in the last 6 months and you're not eligible for that program, how are we going to recoup those costs? So there are sort of operational mechanical issues that need to be wrestled with. But if that's important, that could be designed into the program.
Are you happy with the child care tax credits as they are today? Is there any improvements that you think need to happen?
I think there always could be improvements to everything.
Yeah.
But, that's one of the biggest challenges for workers is a lot of families are paying as much as a mortgage or rent for childcare. So, when they're making $12, $13 an hour and it's costing them, if they have 2 children, close to $1,000 a month for childcare, it's one of the biggest reasons that employers say that they have high turnover, because families cannot afford childcare, and some employers are working to putting childcare at the place of work because it's such a challenge. So, that's something that, we have to think about.
I mean, President Obama had made a major proposal to expand the child care assistance grants, and it cost $80 billion, over 10 years. It was $80 billion.
We don't do millions anymore.
About what Apple would owes on their...
You're double counting the Apple money.
I am double counting. I can give you a Microsoft example too. And that would have helped 2 million families. I can't remember how much each family would have gotten, or on average how much they would have gotten, but it essentially would have made it much more viable for them to work because of the assistance on childcare.
Mm-hmm. What of the tax reform discussion we've heard, what makes you most hopeful if lawmakers do manage to get it over the finish line, which is a big, big question at the moment? Maria, in particular, have you heard anything from out of Washington that makes you think, oh, good? Anything?
At all.
Just something one thing we'll all remember it, anything.
Wow, that's not a fair question right now. Well, I'm hopeful that they're talking about tax reform, that there's an opportunity with tax reform that maybe we can look at when we're looking at whether it's the VITA or the EIC or preserving the charitable deductions for families. I'm hoping that they're going to look at all that. I can't say right now, I really can't think of something, but I'm hopeful, but because they are talking tax reform.
Right.
So if that happens,
Right.
that's hope.
One of the things we actually talked about before this meeting, which it hadn't occurred to me before I got here, she was saying, I hope they keep the charitable deduction. And I was saying, well, I think they are. Nobody's saying to get rid of it in the proposals we've seen. But then I remember they want to repeal the estate tax. And the reason a lot of people give to charities is because they want to lower their estate to avoid the estate tax. So yes, how is that going to work for you? No, I mean, I've talked to some financial planners, and they've brought that up as a concern, that charities might suffer. Do you agree with that, or do you think not so much?
So why it's so important is that when we're sitting back and, our major, the work that we do in communities to help families with financial stability and raise families out of poverty. And a lot of the burdens fall on the not-for-profits to provide a lot of the services. And as we keep hearing of programs that are going to be cut, and we start thinking, okay, well, that means we're going to have to step up as not-for-profits to be able to do more work to help families, because we want communities to thrive, and we care about everybody that lives in our communities. If the charitable deductions are reduced, that we do not receive as many, then it's almost like we're getting double whammy is how we're getting hit, because the program's cut and the federal funding won't come down to us, nor the charitable deduction. So at this time, we start thinking, okay, what are we going to do at that point? So it's very important to us. However it falls or how it happens, it's something that we're watching very closely, because it's very important to everyone that lives in our communities.
I would just add, when we think about where the charitable donations dollars come from, some of them come from the state tax planning. Overwhelmingly, they come from living individuals who are making contributions. Many people make charitable contributions and don't get a tax credit, or a tax deduction rather, and many...
Because they don't itemize.
Because they don't itemize.
Yeah, they take a standard deduction.
And many people claim a lot of benefits. A lot of high-income earners who are donating money are getting a very large federal tax subsidy, that's what that deduction is, that encourages them. And they do respond. Individuals do give more because of the charitable deduction. And if it were to be curtailed, that would have an adverse effect. Going back to what Trump said during the campaign, not something that he said more recently, he did have a proposal to limit itemized deductions, and that would have had, that policy would have an adverse effect.
Right.
My suspicion is it would have less of an effect on VITA programs, just because of the way the distribution of dollars come, but it would certainly have an effect. And quite frankly, the proposals to double the standard deduction would make fewer people itemize and would limit that incentive
The value
for
of charitable.
some of the charitable. And so that would have an
So,
effect.
even if they didn't repeal the estate tax, they preserve the charitable deduction just by doubling the standard and pushing more people onto the standard deduction, you think that will also have a negative? So far, charities are not coming out very well in this.
What I would say, just sort of in the weeds
Yeah.
here, with respect to what Speaker Ryan and Chairman Brady said in their blueprint, they were very clear on the importance of charitable giving. There are certain elements of that blueprint that have not been fully played out, and it was clear from reading that document that they intend to ensure that people continue to have an incentive.
Just have it separate, okay. Frank, did you want to weigh in on this?
Well, just back to the first question about where do we want tax reform, I guess was really the question. Or is there something to look forward to in tax reform?
What are you hearing out of Washington that makes you optimistic?
As an organization that thinks that the system needs to be, we need to raise a lot more revenue from the system. The proposals that are out there are going in the complete opposite direction from our point of view. So we're much better off trying to stop tax reform at this stage of the game. We think with President Trump in the White House and with the Congress controlled by the Republican Party on both sides, that we will not get what I would call progressive tax reform that will benefit most Americans.
I have one last question, and I'm going to turn it over to the audience. We also talked about the so-called benefits cliff on some tax breaks, meaning if I earn above a certain amount, I lose benefits from a social welfare program that I need to sustain my family. Is there something they can do in the tax code to appease that effect? Because it can really, because a parent can think, well, maybe I won't work, because you sort of weigh these horrible options, like I won't work because I'm going to lose the benefits if I earn this much. Is that a fair description? So what could lawmakers do for
give
that?
the macro answer, which is those issues can be mitigated, and it is expensive to mitigate those issues. And so you can mitigate those cliffs by phasing out those benefits for people as their incomes rise. You could mitigate those effects by making those programs available to people at higher levels of income. And doing so expands the cost of those programs. And so there is a tension between targeting the benefits to the people who are most in need of this assistance and not providing these programs to high-income individuals. So at some point, you have to flip from being able to get it to being able to not get it. Right. And then as you sort of relax the rules, make it more generous, either give it to more people or slow the phase out, you can take away some of that sting, and there's a budgetary consequence of it. And that's the trade-off.
Did you want to weigh in?
Yeah, and we talked about training employees. So Career Edge is one of our programs that we raise private funding for Career Edge, and that's to invest in the low to mid-level workers, to provide training dollars to the companies to be able to upskill their workers and lift them up so they can make higher wages. And we often run into the employers saying to us, help us, because our turnover rate's in the 90% with a low wage worker. And they ask, where do we need to get them to that they don't quit? Because they do, because again, if they lose, what happens is that they now report that they're making, let's say $12 an hour, and 3 months later they have to report for child care assistance that they're receiving or food stamps, and they get cut. They just get cut off, and at that point, that parent has to make the decision, I cannot afford to go to work. And this is why I think we really believe in the EIC, because that's more of a curve. As employees earn more, the tax credit is lower, but they see their wages going up, and we can have that conversation. But now you're making this much money, and you don't need those services. And that's the true economic power of lifting people up. So the benefits cliff is very real, and I believe that employers suffer a lot from the benefits cliff because of employees quitting because they cannot afford to go to work. So it's something that I think we talked about, that on the state level we have to look at how do you have a gradual staging off process as workers are training so they can make the higher wages so they're out of that benefits cliff situation.
I guess a thing to add, I think raising the minimum wage is critical to put people up there where they're getting a livable wage, and that's more important than anything we could do on taxes, to be honest with you. I think then the question becomes, okay, if folks are at $15 an hour, is there still going to be that cliff? And it probably depends on the region of the country and whether it's urban or rural, that sort of thing. But is that cliff going to be there? And if it is, then obviously we've got to change the eligibility criteria for food stamps and EITC, et cetera. But I think the most important thing is let's get a solid minimum wage there first. And that gives people so much more dignity because they're then working, they're making their living that they can afford to survive with their family.
So it's up to you guys to grill them. So I think you're going to be passing out a mic around. Yes, sir.
Thank you very much. Larry Checker Communications.
It's not.
It's not. Thank you very much.
The green light's on, there you go, okay. Larry Checker Communications. This may sound like an off-topic question, but I am just wondering, has anybody ever done any studies on the impact of promoting birth control on the budget? For example, what we're looking at now is a total decimation of Planned Parenthood, for example, and I think this has impact on all the budgetary stuff that we've talked about. childcare, people having kids that they don't want and having to lose their jobs or leave their jobs, job training, it goes on and on and on. There's a ripple effect here. Is anybody doing any investigation of that?
I don't know really.
No? Is it worth doing?
That's outside my scope.
Yes.
I'm happy to say that too.
Want their children to, yeah. Yes, sir.
Hi, my name is Carl Polzer, and I've started a project called the Center on Capital and Social Equity, which is trying to include everybody in our economy. I noticed in the background material there was a lot of emphasis on tax exclusions and deductibility, where there's a lot of inequity for retirement savings accounts, up to $500 billion, most of it going to high-income people. So, for example, on retirement accounts, more than $100 billion is foregone in taxes because it's excluded from income, most of the high-income people. What if we rearrange those a little bit? So half the people have no retirement account now, and you reduce the tax advantage at the top, and you provided a tax credit at the bottom for everybody. So everybody would be a capitalist. Everybody would have a little bit of capital under their control, learn about it, and it's like $40 or $50 billion a year. Or you could just get it from somewhere else by raising the corporate tax. But I mean, there's stuff like that needs some discussion. There's home mortgage.
Do you mean by that if I save $100 that I get a tax credit for $100 from the government?
No,
they just reward my savings?
I think it would be like a once and for all gift. Like every year, the government would put $200 or $300 in everybody's account.
Mm-hmm.
You don't even have to keep it. You could opt out. And then, a small amount just to establish an account, so they have somewhere to go. If they go to a job, they have an account.
Does anyone want to weigh in on that?
Well, I think the challenge is, you focused on retirement security because there actually sort of is a crisis around retirement security for a lot of the population. And what you're referring to is it's tax expenditures. Tax expenditures are spending by another name. And what this is there's tax breaks for money that's put aside in pensions, and there's tax breaks for money that's put aside in your 401k if you're lucky enough to have enough income that you can put money into a 401k. I think the two combined cost are about $150 billion a year, so it's a lot of money, no question about it. Now, our organization doesn't have we think that helping people save for retirement is quite important. The problem with the way the tax expenditures are designed now is what you're raising, which is most of the benefits are able to be taken by folks at the top of the income scale because they are the ones who actually have the disposable income where they can put it in a 401k, or they've got a great job where the employer is doing that for them. And what's happening is folks at the bottom aren't able to save for retirement, first of all, because they just don't make enough money. And $200 or $300 a year, I don't, it would be a help, but it probably isn't enough money to do what you need to have that nest egg to supplement Social Security in the back end. So I agree we need to revise how these programs are structured so a lot more of the benefit is going to folks at the bottom, lower down the scale. I think the problem with the retirement security area is that there's, people's disposable income, $50,000 a year, you probably don't have that much money to save away every year. You're just living.
I would just note that there's a policy called the Savers Credit, which works in a general direction. It's not the program that you described, but there is a program, a federal income tax program called the Savers Credit, which encourages low and moderate income households to save modestly. And then, of course, there's the Social Security program. People are paying in, and at low income levels, they're getting a relatively high return. Now, that program is not on stable ground going forward, but the components of that program provide income replacement that's reasonable relative to people's pre-retirement income.
But to the point that I don't make enough money to save, so even if there's a saver's credit, I can't take advantage of it because I'm paying the daycare and I'm paying for dinner do you have any response to the idea of a government infusing some few $100s of cash, even though, as Frank noted, it's not very much?
Yeah, I mean,
Maybe not.
Liberals were quick to attack proposals a decade or two ago about privatizing Social Security, where
Right.
where the government
Right.
would create personal accounts and put money in people's accounts.
Right.
So those ideas do exist. They're not too popular at the
Right,
moment.
right. Yes, sir.
Patrick Brown, I'm a graduate student. I'm wondering if anyone could talk about some of the discussions around a universal child credit and some of the proposals from Senator Rubio and others to raise the amount and refundability of the child tax credit and the benefits and drawbacks from that.
To increase the child tax credit? Yeah, I think there are very few proposals, if any, I think at the moment that are sort of popular in Congress to increase the child tax credit. Folks remember this is a policy that was created in 1997. It was a $500 credit. President Clinton and Republicans in Congress created this policy for the first time. The policy was doubled to $1,000 per child in the 2001 tax cut that President Bush and congressional Republicans pushed through. And the eligibility of that credit has been expanded somewhat over time. It's refundable, partially refundable. It costs about $45 billion a year, I think, and phases out for moderate income households. The only thing I would say from a policy perspective is that if you were to increase that credit, you would also be increasing the disparity in tax liabilities among low and moderate income households. And so that's a tax relief that only goes to parents. And I'm a parent, and so, I get it. So I don't mean it critically, but there are a lot of low and moderate income households that are ineligible because they're not parents. And so we want to think about what the distribution of those benefits are among the low and moderate income class, as well as other factors.
Yes, sir.
I'm Will Rice. I work with Frank at ATF, but I've also been a VITA volunteer and for several years. And I was always impressed by people, even with very low incomes, were very concerned about making sure they paid their taxes. I was very impressed by that. I just want to go back to the first discussion and just ask Alex, not only are corporate profits at record highs, but corporate cash, just the amount of cash, not only offshore but onshore corporations have, is at record levels, and borrowing is very cheap. So if companies have access to all this money, why aren't they investing that? And why are they instead, as some studies show, spending over half their profits on stock buybacks and dividends, which just helps their shareholders and their executives, rather than opening factories, hiring people, making more products? If the supply side theory works, why isn't it working when corporations already have so much money?
That's a great question. I don't know why at any moment in time firms would hold cash versus dispel their cash. Obviously, the firms that are holding cash could be anticipating a tax reform that would lower the tax burden if that cash is held offshore and is untaxed at the moment. So the fact that a decade ago or so, we provided a temporary tax break that encouraged firms to bring the tax back. At that time, it was $1 trillion they were holding offshore. We said, okay, if you bring it back in the next 6 months, you get a tax break on that. Well, what happened after that window closed? Everyone said, oh, this is great. We're going to try. Let's do this again, right? And so that has the adverse effect of encouraging firms to hold their cash offshore. Now, you said this, cash offshore and onshore. Firms that may be retaining earnings onshore, for a variety of reasons. They may be planning an expansion, they may be planning an acquisition, they may be hoping for a lower tax, a tax change that means that they could pay a dividend at a lower break. I think it's important to distinguish between sort of the moment in time analysis and sort of the long run analysis, and we need to think about both. In the long run, firms must return their cash to their shareholders. But that's the really long run, right? The question is why at any moment in time are they not? I don't have a good answer for that.
Yes, the lady in the back.
My name's Elaine. I lost my voice this weekend. I'm Elaine Mogg from the Tax Policy Center. And Alex, in your opening remarks, and then later when you said the big problem with the EITC is a low take-up, and you tossed out the number of 50%. My sense is that that's wrong, and that if that take-up is that low, it's only among people who are eligible for very low credits, primarily workers without qualifying children. So I'm wondering if maybe the answer to your problem of low take-up is what your co-panelists suggest, which is increasing the childless EITC so that it's very similar to what families with children already get in the $3,000 to $5,000 range.
If I said that, I was only puppeting someone else. I don't have it. I didn't come with a stat on the take-up rate. So if Frank did. So I might have repeated Frank's comment, but I don't know the statistics on take-up. I think the fix is an interesting idea, though. I mean,
Yes, sir.
Hi there. My name is Jesse. I'm a student at the University of Michigan and an intern at ACG Analytics. I was wondering, Mr. Brill, you had mentioned earlier the border adjustment tax is a possible solution to kind of this gamesmanship we see corporations engaging in to have profits offshore. My question for you was about the border adjustment tax, and the way you mentioned it, the way you speak of it, it really just kind of sounds like an import tariff. Could you explain the difference, if there is one, between those two?
Yeah, that's a great question. It may be an academic question because I'm not sure we're going to have the stats. It certainly does feel, in many regards, like an import tariff because the way the proposal works is two pieces to the border adjustment tax. One is to disallow the ability to deduct as an expense your imports, a firm's imports. And so in that sense, a tax would be paid on the imports. What's critically important to understanding the economics of this policy is that it is not that alone. It is also, and this also seems to bother some people, but you have to understand sort of the way these two factors work together. The other part of the border adjustment tax is an exclusion for the revenues associated with exports. And so it is an import tax and an export subsidy in equal and uniform measure. And it is that factor, that the symmetry of this policy with respect to imports and exports, that public finance economists will tell you will have the effect is a wash. The theoretical effect is a wash. And the reason is because this change on both sides of the ledger, imports and exports, will result in an adjustment in the value of the dollar. There's a dispute and a debate, sort of an argument among economists about whether that exchange rate effect will occur, whether it'll occur perfectly, whether it'll occur immediately. The theory is sort of simple and elegant, that it will adjust. There are some reasons to think it might not adjust perfectly, but that's the idea. As a result of that, if you sort of buy that theory, that response, then imports become cheaper. So they're taxed, yes, but they're also cheaper, and you're back to where you started in sort of the net cost. And some people don't buy that theory. They don't think that the market works that way. They don't think that there's a liquid market or a perfect market for currencies, and they're concerned that it's going to result in higher prices for consumer goods.
There's a gentleman over here. Yes, sir.
I know that an issue, Mark Green from Safety Net in Madison, Wisconsin. There's an issue with people in America suffering or living with income volatility, and it's a big issue. And from what I've heard, people solve for that in a lot of cases by going into their retirement account and taking on a hefty penalty for taking that money out. And I'm wondering if there's been any talk about relieving some of that pain for people with maybe getting rid of that or having an income-based penalty, or maybe what the effect of that penalty is for people based on their income, or if there's a way to help people with that issue, because to me it seems like it's an issue of either not making enough money, they're trying to do the right thing, they're trying to do things that the tax code is encouraging, but life gets in the way and it makes it really hard to do that. So I'm wondering if there's some study or analysis on that.
And just to be clear, you're talking about the 10% penalty plus income tax that's owed on a 401k withdrawal or something like that.
Exactly, sorry.
Right, the hardship withdrawal.
Yes.
Although I'm forgetting the rules now. If it's a hardship withdrawal, do you still get the tax? I'm sorry, I forget. Are you aware of that?
I know the penalty is 10%, but I don't know if there are there waivers to that penalty.
I think there might be a waiver if it's true hardship and you have certain, you're nodding yes and you look very smart, so I'm going to go with yes. Yes, there are. That's my fact check right now. But is your broader point, people should have access to their retirement savings at all times without penalty?
Yes, or maybe there should be something linked to the income. I mean, if they have a really rough year where they're, below the poverty line or something like that, but they had some savings, I mean, I think that's when it impacts them the most, when they need it the most, and I don't think that the tax code is meant to punish people.
So have a rule based on income volatility. If your income drops more than X percent, you should be allowed to tap your savings. That's an interesting idea. Does anyone have any thoughts?
It's not an area I'm knowledgeable about. I wish I could help give you some opinion, but I understand people's circumstances change year to year, so it'd be definitely helpful to smooth that out.
Do your clients have retirement savings that they've used in that way?
I'm not aware of any, but I'm sure that they have. That's why we're trying to work with financial institutions to help build assets and open up accounts that then they have as a fallback. But one of the things that I think we're finding most successful is helping our clients build credit. So, but, I'm not really sure about that, but they need money, and we have some employers that are setting up accounts with credit unions that if they have an emergency, they can go and get a short-term loan, and it will be deducted out of their pay stub to pay that back, while at the same time they're building credit because it'll be reported. So they're trying to find different alternatives to help families, because it does happen, and they're trying to keep them away from places that they may have to pay some high interest to be able to use their own money.
Yes. Yes, sir, in the back.
Hi, An DeGreeny, I'm an entrepreneur. I'm curious if we take the budget of the earned income tax credit, because you get the credit at the end of the year, there's the incentive to work, you don't see it immediately, versus say if the minimum wage went up or something like that. So I'm curious if the panelists could answer, if you had that pot of money and you wanted to create this incentive to work and the other benefits of the wealth transfer, might you invest it in a different program, say topping up a low wage or something like that, so you could create a stronger incentive to work or have an effect that would be larger than what it is now?
I'm sorry, do you mean transferring some of the money that would go to the EITC to raising the federal minimum wage, something like that?
Or something like that. And each panelist can respond how they, if they had the, $60 billion, it seems very divorced. If I have a minimum wage job and then I get the money at the very end of the year, the incentive, I don't see that money immediately, versus if I'm looking for a job and I see a $7 wage versus a $10 wage, the incentive is much stronger and immediate, I would think. But maybe the low-wage consumer is sophisticated enough that they see the money down the road and that's an incentive enough.
Do you know?
I don't know the answer, but just thinking through that, when we're thinking about $8 an hour to $10 an hour, you have to think about that. That's barely making it, being able to afford things. So you're still within that wage, where the earned income credit, we look at it also as a savings account. You can look at it as you're putting money into a savings, you're going to get at a certain point and you're going to save for it. Instant gratification, I think, is one of the things that gets a lot of people in trouble. But you're absolutely right. But the main objective is that we want to get people trained and skilled with the certifications so they can make higher wages. So preparing our workforce and our skilled workers, as we're talking about companies that hire folks, a lot of it is that we have a lot of job openings that we don't have the skilled workers to place in those jobs, that we have that issue. So it's a matter of, I think, that we have to train our individuals so they can make the higher wages, because if we don't get that, the wages are higher. And you have to also look at it, are the employers willing to pay higher wages? Where we know that the EIC is a credit that the worker earned that money. But you have a great point, because you need it every month and you want to have that money. So it's a great point, but I don't know how we do that.
I mean, I guess I think that the most important thing is to raise the wage. That will give the immediate gratification. That will actually give people the incentive the additional incentive to be working and, put a lot more money in their pocket than they're getting now. I think that I wouldn't want to erode the EITC at this point. It's such a successful program. It's helping 6.5 million people. It's lifting that many out of poverty right now. So I don't think that there's a percentage, that there's an advantage to reducing the funding there. It's leveraging, right? It's leveraging. So I think the key question is, how can we raise people's wages across the board?
Are there any other questions? Thank you so much to each of the panelists. You did a great job.
I just want to thank you all. I think this has been a great discussion. I learned a lot, and I hope you all did too. So thank you all so much for being here. Thank you for your expert managing of the conversation. And please come join us again for our next conversation in the Working in America series. Thank you.
And thank you very much. The last thing I needed to do was...
Proposal I costed out was